enabling our customers or allowing our customers to engage with us on our digital channels. So it was a huge opportunity. We don't focus on cost reduction. What we do is optimizing costs, because at the end of the day, you have to invest to achieve returns. And right now, the biggest challenge is to make the country grow. So we need to look at how do we double that. Last 3 years has been a cataclysmic impact on the country. It's all started with the constitutional crisis, then we had the Easter Sunday bombing, then we had the COVID period, and then the biggest impact really came from the economic crisis, right? So that was really the serious issue that we had to face. So very early into this, we rallied our top team together, and we started brainstorming in terms of how we should be managing what is to come. At that time, we didn't envisage the economic crisis, but we saw the COVID coming and also the Easter Sunday bombing, the impacts. At that time, we came up with a plan to address these operational challenges. So first was to address the health and safety of our staff. So looking at investing in technology for staff to work from home. Then another challenge was in terms of business continuity, disaster recovery. So all our policy documents had to be rewritten, and we had to make sure that we are actually in that. So we were actually operationalizing our BCP and our DR situations, and had to take a look at some of the fresh sites that had to be coming in for that. And then the digital part, so enabling our customers or allowing our customers to engage with us on our digital channels. Never have we had a situation where they had to rely on the digital channels like this. So it was a huge opportunity. The fact that we had invested so much in digital infrastructure and also had a 24/7 contact center for them to actually talk to us and engage with the customers when the branches were not fully operational at certain times of that period. So those are some of the big operational challenges we had to overcome. Outside that were two other key areas: managing the liquidity issues for the bank, managing the foreign exchange issues for the bank, and also supporting business revival efforts. So if you remember about managing liquidity and foreign exchange, we used to have crisis management meetings daily almost, right? Jonathan used to lead some of those. Then subsequently I started leading these meetings where on a daily basis we used to manage our funds inflows and outflows, managing our cash flows literally on a daily basis. That's how, and we had to say no to a lot of our customers, particularly on the import side, and really encourage our efforts on the exports and the remittances. Parallelly, businesses were struggling. Businesses were suffering during that time. So we need to look at a different approach to support them. At one point, we had 20% of our customers on debt moratoriums, where they don't pay anything. 20%, right? That's like 4% of our non-performing, 4 times our non-performing portfolio. That's how big it was. So from there, we had to continue to work in their interest and our interest for them to revive. So initially it was moratoriums, then it was working capital financing. Then we also started looking at vision building workshops, supply chain linkages where suppliers and customers can work together, and also enabling digital, helping them to use digital to do selling their products and services, using social media to market their products in addition to their normal retail stores, and also guiding and supporting them on exports by linking them up to websites like the Amazon, the Alibaba, and so on. So it was a full-fledged effort. There was a lot of work from a governance point of view that we need to put together to make that work and to really become operationally efficient and manage those challenges at that time. It was a great encouragement for our staff across the bank when Asian Bank recognized us as the best managed bank during COVID times in Asia. And this was quickly followed by the Chamber of Commerce in Sri Lanka also recognizing HNB as the best managed bank during that time. So that was a recognition of the 7 pillars on which we worked on to strengthen our governance structure during a crisis time. So at the moment, our cost income ratio is below 30%, but that doesn't reflect the real picture, because as you know, interest rates are at a peak in the last 2 years, and our margins have been very high because of that reason. So when margins are going to get tightened and interest rates are going to come down, still we are confident that we'll be able to keep our cost income ratios below 40%. I think the real factor here is more than the cost income ratio. What really matters is the productivity ratios of the bank. How efficiently are you managing your business? So I think we had an advantage because very early, around 10 years back, we moved into a hub and spoke model where branches are our customer interfacing units, like our showrooms. Basically, they are into customer service and marketing. And then you have the centers. We call it the centers of excellence. We have 5 centers of excellence where about 1,000 staff are located. And that's like the nerve center of our bank. So basically, we are able to specialize now. Branches becoming efficient in what they do through the KPIs that we have set out for them, and the centers of excellence also becoming more efficient in terms of what they do. So there is a lot of effort on internal customer service for the centers, then the SLAs, tracking those SLAs being met, process automations, robotic process automation, outsourcing some of those non-core functions. All these things make the centers a lot more efficient, and that's been a journey for us, and that has helped us in terms of managing our costs far more efficiently from the time when branches used to do everything, right? So now branches are focused only on the customer interfacing work, whereas the centers manage all the back office and the processing work. So that is a big imperative for our cost management. Second is also the digital transformation. So today, almost 70-80% of a customer's requirements, right, can be done digitally through the wallets, through the internet banking, mobile banking, not only for the retail customer, even for the corporate banking customer, because they have internet banking, and now we are introducing payments and cash management as well, so that they can connect with their suppliers, their receivables, and manage their trade all in one electronic setup. So those two are key imperatives. So through that also there is a lot of benefit in terms of what we do for our top 20 cost line items. So we look at utilities in terms of managing those utilities more effectively, right? So we have solarized 100 of our 250 branches. So they are running on solar. So that has helped us a lot in terms of electricity consumption. Then we also have green buildings in the bank. So we have a few poster green buildings like the head office branch, Jaffna building, Nitambua, which serves as a lesson or a learning for the rest of the organization in terms of how you manage natural sunlight, how do you manage the way in which you consume water, electricity, and so on. So that is another important imperative for us. And we drive a paperless office, right? So today all our internal approvals are on our iPads, on our PCs. There is no paper circulating around. Similarly, our credit approvals also happen happen electronically. Even the moratorium process, which was a huge exercise 2-3 years ago, and all that is done electronically. So in fact, our paper consumption today is a fraction of the paper that we used in the past. We don't focus on cost reduction, right? We don't want to compromise on staff capacity building, training, succession planning, hiring the best quality specialized staff, marketing or promotions. What we do is optimizing costs, because at the end of the day, you have to invest to achieve returns. no different to the rest of the world. Many people are talking about not visiting a branch for years. They manage to do all what they need to do digitally on their wallets and on their cards. So that's where the bank is also heading towards. That's where the country is also heading towards. So whether you are from a low income group or a high income group, digital can permeate every sector of the country, and that's really the future. So I have seen, QR code based sell, so that it's completely cashless. So that's the future. So as far as HNB is concerned, we have embraced this 10 years back. I spoke to you about the hub and spoke model. That was a precursor to digital. And whilst we did that, we invested significant amounts of money onto technology. So there's a huge amount of money that has gone into technology, which has to generate a return in the future, right? And COVID helped us. Because of COVID, there were a lot of people who started embracing digital because they had no alternative. So that is a journey that we are going to be driving across business functions, not necessarily on the retail side, but also on the SME as well as on the corporates. So connecting the entire supply chain digitally so that they can actually do all their transactions, banking transactions on the phone. So right now, a very interesting development that we're doing is what we call non-face-to-face banking, where on a video call, you should be able to open an account. And that would mean that literally almost all the banking functions can be done digitally on your mobile phone or on your iPad or on your PC. So that's a huge transition going forward. So then the branches, what is the role of the branch then of the future? It's really about financial advisory, guidance, financial planning. It's more a thinking job, an advisory job. One important imperative we need is the digital ID. So if you have a digital ID, if every one of our customers have a digital ID, that will help this journey significantly. Otherwise, the threat is not from the local banks competing with each other. It is from the IT companies, the fintechs that will start encroaching little by little into some of the key products that the banking sector is today generating most of their revenues from. So it is an imperative that we are prepared, and it has to happen. So HNB is a mass market bank. It's a national bank, right? I mean, all over the country, whether you're in the north or the south or the east or the west, it's touching the lives of literally everyone, from the youth to the elderly folk, to the business community, to the retail customers, the fishing folk. Everybody is impacted by HNB. So for us, shareholder value creation is very important because that's what is sustainable. So we are very much aware that the society, the place that we are, the communities that we work in also needs to see us as an important and a good corporate citizen in terms of what we do. So this is a all-encompassing area for us. And there are maybe 2 or 3 key areas that we focus on. We differentiate ourselves from others. One is financial inclusion, right? So HNB has a product called Gami Pubudua, which has been in operation for over 35 years. And over 100,000 of our customers have benefited. So in terms of rural business upliftment, entrepreneurial, entrepreneur creation, women in leadership, all these areas are touched on by our microfinance business. So lending to the bottom of the pyramid segments around the country are benefiting from the lending that we do. And we see them elevating from one level to the next level to the next level. And that is a huge value creation for the economy when that happens. I think individually as a bank, we have a role to manage our customers, which is our depositors, right? This is our depositors' hard-earned money on which we are using to lend. So from a governance standpoint, that's a fundamental thing. You are the stakeholders or the custodians of bank deposits. So you need to make sure you're securing those bank deposits. And then overall bank stability in the industry is important. Otherwise, you're going to affect the real economy. If people lose confidence in the banking system, nobody will want to keep their deposits in the banks, which would mean that the entire system could collapse. And those were some of the challenges we had to face in the last 2 3 years, because people were wondering whether Sri Lanka also would become in a worst case scenario like Lebanon. So fortunately, we are definitely moving in a more positive direction, and the last 6 months have been extremely encouraging in terms of the trend that we have seen in the country. So I think the regulatory challenge is to continue to ensure banks are stable, secure, and I think there may be 2 or 3 key regulatory imperatives that need to be in place for that to happen. One is fewer larger banks, right? So banking sector consolidation will help, because not all the banks have the finance and the investment wherewithal to be able to invest in the future, and that is digital. So fewer larger banks would have a big appetite to be able to lend locally, as well as promising opportunities overseas, and also be able to invest in the right kind of infrastructure for the people, for technology, and so on. So that is one important area. The second area I mentioned earlier is the digital, and investing in like the digital ID, which is an important investment for the country. The third is to gradually reduce the level of regulations around foreign exchange, flow of funds in and out of the country. All these are important to give confidence. So those regulations, legal infrastructure needs to be put in place. And these things, once those come in place, then as a country we will grow. And right now, the biggest challenge is to make the country grow. As you are aware, IMF has forecast just a 1.5% economic growth for this year, and 3% for next year, and 3% for the next year. So at that pace, if we are going to grow, it's going to be very difficult for people to build earning capacity, increase their disposable incomes, and also for the banks to grow. So we need to look at how do we double that. That is really the imperative for the bank. So with growth comes more profits, more money to invest in businesses, infrastructure, and businesses also will have more confidence to start investing into the country, and that creates a virtuous cycle. So that's really the journey that we need to be in. Going forward, things are only going to look better, but it requires a lot of focus. Things like managing the transparency, managing corruption, building the confidence of the global investors in the country. All these are important regulatory imperatives. We talk about a huge brain drain in the country right now. If we can get people to start coming back and reversing that and starting investing in the country, then that's where the real regulatory focus needs to be, to bring in confidence about the country into the future.